When most people think of hard money lending, they think of Uncle Vinny or somebody that's gonna break your kneecaps if you don't pay, or the mafia, or some type of soprano situation going on in their head. That's simply not the case. Hard money lenders are professional companies that are super easy to use, that are created and made to lend money to real estate investors like you and I. In this video, I'm gonna break down the advantages of finding a hard money lender and how you can really ramp up your real estate investing career by utilizing them. Whether you want to fix and flip, or if you want to buy rentals with the BRRRR strategy, or if you need to close on wholesale deals, hard money lending companies and having a good relationship with a hard money lending company can really be beneficial. You can make a ton of extra money if you know who to talk to and when to talk to them. Before I get into too much about hard money lending, I want to please ask you to make sure you subscribe to this channel, hit that like button, and make sure to comment at the bottom of this video. I personally respond to all the comments and I would love to interact with you and answer whatever questions you have. So what is a hard money lender? A hard money lending company is a company that the sole purpose of that company is to lend money to real estate investors like you and I on a short-term basis. This isn't a bank. They don't want to hold notes for usually more than 6 months, but definitely not more than a year. It's short-term funding that you can utilize to buy a property and fix up a property. You can utilize a hard money lending for both of those things, which is huge. And the reason these companies exist is because your banks that like to deal with real estate investors, none of those banks, or a very, that was 4 varies, small percentage of banks will lend on an initial purchase and a rehab. The banks that we use, the banks that most real estate investors use, are small local portfolio lending banks, and they like to lend on finished products, finished rental products. Those banks don't like to take the risk of purchasing a property that needs work and funding the rehab. So the reason that hard money lenders exist, and private money lenders, which we're not getting into in that video. I have a video up here on how to talk to private lenders and how to find them. We're talking about hard money lending companies. The reason they exist is because banks don't want to do this type of funding. So if you can't find a private lender because it's a little bit harder to find, they're a little trickier to find, you need to make sure to get relationships and develop relationships with hard money lenders. They will lend you up to a certain percentage of the value of the property once it's fixed up, and that sometimes can include purchase and rehab. So quick example with that. So if the property is worth $100,000 fixed up, most hard money lenders, now not all hard money lenders kind of have different rules and different regulations and different things that they follow, but most will lend you $70,000 to $75,000 if it's worth $100,000 fixed up. Now if you bought it for $50,000 and it needed $20,000 worth of work, a lot of hard money lenders will loan you the purchase price of 50 grand plus the 20 grand to rehab it. So they'll loan up to 70 to 75% of an after repair value, which is what a house is worth after it's fixed up. How do you find hard money lenders? This is the easiest part of this entire video. Hard money lenders are super easy to find. They're businesses that want to be found. If you're newer to the industry and you haven't heard of them, obviously you haven't found them. But now that you know what they are, I'm gonna tell you exactly how you can find them. You find them by just Googling them, as simple as that sounds. So just type in hard money lenders near me on Google, and if you're in a decent sized town, they will pop up. If you're not in a very big town, if you're in a smaller town, your next local, closest, biggest town will probably have a hard money lender. The other thing you can do is just join those local real estate investing Facebook groups that I tell you to join all the time. Join those groups, and in those groups, just type in who's the best local hard money lender, and I promise you that if there's hard money lenders in that local group, that within the first 5-10 minutes, there'll be several responses of people suggesting the hard money lenders that they use or hard money lenders that they have heard of. And lastly, another thing I always tell you is go to those local meetups. So go to meetup.com, join your local real estate investing meetup groups, and in those groups, a lot of times there are hard money lenders or people that use hard money lenders. So those are 3 quick, simple, easy ways to get in contact with hard money lenders. Now I get asked all the time, what are the requirements that hard money lenders look for? And the answer is it kind of depends, which I know everybody hates that answer, but I know some local hard money lenders here in St. Louis and other local hard money lenders in other markets that say 0 background check, 0 credit check. They're just gonna lend you on the basis of the deal. Now those are a little bit harder to find, and the interest rates are usually a little bit higher, and we'll get into what the interest rates are here in a little bit. But other ones that do require, they'll require somewhat of a background check, somewhat of a credit check, and they'll make sure you have a little bit of income. So you kind of get both ranges of no checking to checking into a little bit about your income and your background. The good news is all hard money lenders, all of them will heavily weight, if they're going to approve the deal with you, on the value and the actual deal itself. If you're buying a property for $150,000 and needs $25,000 worth of work and it's worth $300,000, there's a very, very good chance that the hard money lender is going to do that deal because there's just so much equity and there's not a ton of risk on their part in that deal. Lots of people say, I'm brand new, it's hard to find hard money lenders. Hard money lenders understand that they have to lend to new investors. That's how they get new clientele and that's how they grow their business. So everybody starts somewhere and lots of people start with hard money lenders, so you can too. Next question probably is what kind of rates you get with hard money lenders. Most hard money lenders are going to be ranging in that 12 to 18% annualized, and that usually includes some points or two on the back or the front end. Now that may seem kind of high, but like I said earlier, these are short-term loans and that's just kind of what the going rate is. That's what I paid when I've used them. That's what other people I know have paid when they use them. They're just part of the deal. You take that few $1,000s or several $1,000s that you're going to be spending on interest to buy a property. You're utilizing money that you otherwise wouldn't be able to utilize. So you're getting a deal that you wouldn't have been able to buy. So just think of it that way and understand it's just part of the deal. Put it on part of your rehab costs. It's going to cost me $6,000 in hard money interest and fees, or $4,000, whatever it turns out to be. Just take that as part of your deal and part of your rehab budget. I'm going to talk about an example deal now, what it looks like. Then I'm going to kind of go to some pros and cons of hard money lending. So an example deal would be, and like I said, you can use this for a flip or a BRRRR method purchase. If you don't know what the BRRRR method is, check out this video that Lucas and I did in our latest rental property where we break down the BRRRR method from the start of the house before it's rehabbed, and then we're in the house after it's rehabbed and break down the BRRRR method along the entire way. So that's a great example of what the BRRRR method is. So check that out if you're not familiar with the BRRRR method is. This is how I would go about my first hard money deal. I would contact several hard money lenders, as many as I can in town that have a good reputation. You can find out they have a good reputation by checking out their Google reviews or just asking people that have used them. So talk to several hard money lenders, and for the most part, they're going to possibly do some type of background check on you, check some of your income statement, check your credit score. Some won't, like I said, but get approved by as many hard money lenders as possible. Now, most towns don't have 15 or 20, so you're probably going to have 2 or 3, but a couple hard money lenders that you are approved with and that are willing to do deals with you. And I would just lay out what the deal looks like. And they understand the BRRRR method, they understand flips, they understand wholesales, they understand everything because this is their space, they're in the space. So if it's new to you, that's okay. They might even be able to help you along the way. Some hard money lenders will look at a deal, and if it's not a good deal, they won't fund it, and that's probably a sign for you not to buy it. So what I would do is I would just say, Mr. and Mrs. Hard Money Lender, if I come across a deal in this area of town or this general area, and you know it looks like this, and I'm buying it for about this price and needs this much rehab, you know, would you be willing to do a deal like that? And they'll usually kind of give you some parameters of types of deals they're willing to do or a certain amount of money that they'll loan you. You know, you're approved up to this amount, and then you, after that, you get that approval, so you kind of have that pre-approval from them, and then go out and find a deal. And then when you get a deal under contract, definitely put some type of contingency to get it approved by your lender, your hard money lender, and then you bring them the deal to the hard money lender, and they will look it over and they will do their own due diligence. They'll probably want to look in the property, they'll do a little bit of underwriting, and if the deal makes sense, they'll give you the green light and you can go ahead and finalize that contract and purchase it, and then it's all about executing from there. But the general consensus of that story is I would talk to some hard money lenders now, even before you get to come across deals, so then you know a little bit more as you're looking for deals, what price range you need to be in, or what area of town, or what type of properties that they're willing to lend on. So you have a huge advantage when you're able to offer on houses with hard money lending behind you, being able to offer all cash, you know, pending a quick approval or pending a lender walkthrough in 48 hours, something like that. That offer looks so much more appetizing than somebody else who's offering and doesn't have funding lined up, and they have to have a longer contingency or different type of terms or different exits or different possible exits. So having that hard money lender approval before you go look at deals is a big, big help. Some huge advantages when dealing with hard money lending companies is the fact that you have access to money and access to capital that you probably wouldn't have had access to in the first place. So therefore you can buy deals that you probably wouldn't have been able to buy in the first place. Another advantage is they're super quick. Most of the time once you get approved with them, if you've done a few deals with them, they can fund stuff within a week or two for the most part. So you have super quick access to the funds. And they're also super, super easy to find. Like I said, I talked about it earlier, but all you got to do is Google them, look them up on the Facebook groups, or talk to your local meetup groups, and you should should be able to find a lot of hard money lenders if you're in a decent sized town. Another benefit is they really weight the value of the deal and how good of a deal it is. So even if you're newer and don't have the best credit or the most equity or the highest income, if it's a really good deal, they will heavily weight that in deciding whether they're going to fund the deal or not. The only really negative or con that I can think of is it's a little bit higher interest rate than some other types of funding sources, but if it's your only option, just take that pill, swallow it, and go get the deal. If you got any value out of this video, make sure you subscribe to this channel. We do 3 videos a week. We provide as much real life content as possible. Someone watching this channel can learn a lot of, in fact, I had somebody on a TikTok live just the other day said that they made $15,000 just by following our stuff for free and actually taking the advice that we give out. So you can make a lot of money just by watching all this free stuff. So make sure you're subscribed. Check on the next one.